Hi everyone, it's Nancy Godrat. This video we're going to go over how to journalize transactions in General Journal. And if you have time, we're going to go over posting. Otherwise, I'll have another video for that. So, recording process consists of 3 steps: analyzing transaction from a source document, entering those transactions in the journal, and eventually transferring, which is called posting, to the general ledger. So let's go over the definition of general journal. It's a book of original entry, meaning entries are originally entered into this document. And the reason for using it is the 3 reasons written on this slide. Now, what does it look like? The general journal looks like this. It's a 5-column record. It has a date, it has account title, explanation, a reference column, a left side which we call debit, the right side credit, and also a page number on the top. J stands for journal, and the page number, for example, page number 1. Now, let's look at these 5 transactions and see how we're gonna analyze and journalize it. The first transaction happened on January 2nd. Owner contributed $100,000 in exchange for common stock. So let's analyze it the way that we analyzed it in chapter 1. So we know that assets increase, and then we know that on the other side of the equation, common stock increases. Now, we have to convert the increase or decrease, whatever it is, into debit and credit. Based on the convention, we set any asset to increase it, we put the amount in the left side or debit side. So in this case, the asset cash, we need to increase it or debit it by 100K. And based on convention, to increase common stock, we need to credit common stock for the same 100,000. Now, guys, remember, every transaction must have at least 1 debit and 1 credit. And the dollar amount of debit must equal the dollar amount of credit, otherwise your equation is not in balance. Now, we have 2 account names, cash, common stock. Which one do we write in the journal first? So the convention is that the account that is debited is always written first. So in this case, our cash is written first, and the amount $100,000 go in the debit column. And so I also need to put a date, January 2nd of, let's say it was 2019. And then the name of the account that is credited always must be indented. So what I will do is leave some space or start under the last letter of the debited account. So in this case, common stock is credited, and on its corresponding line under credit column, we put the $100,000. The third line normally is a description, very short description of what happened, explanation, contribution, owner, contribution is perfectly fine. Now, there is no indentation required for the explanation. Your book puts the explanation in parentheses. I guess to make it different, distinguished between the name of the accounts. Now remember, you cannot do this. This is not acceptable. Putting the $100,000 next to each other is incorrect. Don't do that. And also, what else is incorrect? Incorrect if we put a sentence in here, received cash. You cannot say that, just the name of the account. And you cannot do this. You cannot say, okay, I'm gonna put the common stock first and then put the cash in here and say, okay, I know that my common stock needs to be credited and my cash be debited. So what's wrong with it is that you have written the name of the account that is being debited below common stock, the name of the account that is being credited. This is incorrect. So please don't do that either. So we're going to go over all the wrong ways of doing it until we remember what to follow. So that's it. Okay. Now, second, always leave an empty space between each journal entry. This is called a journal entry, meaning that we entered in our journal the effect of the transaction. So for the second one, January 7th, what has happened is that we have purchased supplies and we paid cash. So let's analyze this the way we analyzed it in chapter 1. So what happened? Assets, which asset? Supplies is increased, and another asset, which asset? Cash, decreased. Supplies is an asset. When we purchase it, we haven't used it, so it's a resource for the company. Now, how do you increase supplies? Because it's an asset by convention, we debit assets to increase them. So we're going to debit supplies for the 2000 and reduce asset by a credit. We're going to credit cash by $2,000. So this transaction only affects the asset, and there is no effect on the right side of the equation, basic accounting equation, being liabilities and stockholders' equity. Do we have at least one account being debited, one account being credited? Yes, we do. Supplies being debited, therefore I have to write the name of supplies in my entry first, because that's the convention. And we need to write the name of cash. We need to indent it, so on its own line. So that goes in the line below supplies, and a short explanation, purchased supplies. Okay, now you're wondering why I'm leaving the reference column empty. So that's for posting. So once you finish your journal entries or journalizing, once you record your entries in general journal, the next step is to take one entry at a time, the debit and credit side of the entry, transfer it to general ledger. What is a general ledger? General ledger is a list of all the standard format account that the company is keeping. So let's see. Okay, so for example, if you go back to our journal, cash was debited. So I'm going to go find the general journal and put 100,000 on the debit side of cash and put the reference, put the account number in the reference column of the general journal. Why? Because this shows that my I have had a chance to transfer the 100K to the respective account in general ledger. Now, when you don't see an account number on the reference column, that means you haven't had a chance to transfer the data from general journal to general ledger. Why do you need to transfer the data? Because if you look at this, I don't know what is the ending balance of cash. I mean, this is two entries. It's easy. You can say 100,000 minus 2,000 is 98. But imagine if during the day you had 50 entries. You don't have time to go over each entry with your calculator and add and subtract for each account what is their ending balance. Therefore, we have created a new document called General Ledger that shows a standard format account for every account that the company has, and it will show you after each transfer what is the balance of that account. Now, what is the reference column in the general ledger standard format account of cash? That is the page number that transaction is coming from. So this $100,000 is coming from General Journal page 1. Remember how in the General Journal we had a page number on the top? Why do we do this? In case we have any questions about this entry, we can go back and look at the complete both debit and credit side of the entry. Now, therefore, once I'm done with transferring the debit side, I also have to find my common stock account for that is a standard format account and put the 100,000 on the credit side of that account. So let's just use a T account in here. Let's make this one common stock because I don't have time to create another 6-column format for common stock. And let's delete these from previous tape that I made for you for describing rules of debits and credits. So now remember, for common stock, the credit side increases that account. So therefore, in here, I'm going to write down the date January 1st and the amount $100,000. And as you can see, there is no reference column to write down, J1. And but then the account 311 on the top that I created for common stock is going to go in here, 311. So that means these reference, when you see the account numbers, it means that you have transferred the data to general ledger. So if you want to take a look at the general ledger, oh, I meant to show you this one. It looks like this. It is a document that shows all the accounts of the company. So there is a page for cash, supplies. Now, the order of accounts in a ledger, assets always come first, followed by liabilities, followed by common stock, retained earning, dividends, revenue accounts, and expense accounts. And chapter 2 has a place that shows the ledger. So there is a 6-column format or a standard format for cash, supplies, prepaid insurance, and so forth. In the next video, I will go over a couple more examples and a trial balance. Talk to you soon.